I want to go with 5 Lingo. I guess I would just say some that I was asked about, like cross threads, TikTok, where I mean I post something or responded to something, and somebody asked, "What does that mean? What is that referring to? What's that abbreviation for?" Okay, because one of the things when it comes to the stock market or option trading, you're gonna hear a lot of people refer to certain things in an abbreviated manner versus just saying the whole thing out loud, like you hear FOMO, things like that. Okay, fear of missing out, which is what we'll talk about. All right, so the very first one that we are going to look at is DTE or zero DTE. That is just basically referring to the expiration of a stock option. Okay, zero DTE means 0 days till expiration, or you may hear someone say 0 days till expiry. Okay, that is just saying that it's only this trade, mostly you see with SPY, sometimes Tesla or whatever platform you're trading on, would allow you to do zero DTE options, meaning that that option expires the exact same day. You don't have to tomorrow. You don't have no time to let that thing play out. Whatever happens with that option that day is what it will be, because this is the day that it expires. And number two is dead cat bounce. Now this one was from Threads, and someone was like they got faked out, and so I saw what stock they were talking about, and I was just like, that was just a dead cat bounce. That was an easy giveaway, easy catch, because it had a head and shoulders form, and so likely it was not going to go up very long. And someone was asking, what does that even mean? Like they've seen it before. Dead cat bounce is just a faked out reversal. So you may see the price going down and you see it's getting to like a heavy support level, and you think, okay, once it's been on this massive downtrend and it may get down there, and you see that it begins to push back up, but it's very short term, and you think it's safe to enter into calls. But then it gets to a little, let's just say a higher low resistance, it hits, and then that thing comes right back down and breaks below whatever support you thought was going to hold it up. Just a dead cat bounce. When a stock has been on a long downtrend, get somewhere down there, you think it's about to be a reversal, and it's not. And it just reverses very, very short term, or maybe one or two candles, depending on what time frame you're on, and then it starts to go right back down. Okay, so that is what a dead cat bounce is referring to, just a fake out or a fake trend reversal. Now, number three is rallying, and rallying is just referring to a stop soaring to the upside. So let's just say earnings come up and it was either low or it was at a certain amount, and you say, you know, SPY is rallying in the after hours, or it's probably going to rally tomorrow. It's just referring to the stock pushing up, being in an uptrend, or just soaring. Rallying is just seeing a stock suddenly on an uptrend. Now, number four is FOMO, okay? Fear of missing out. We probably all have heard this. It's used across different things, but mainly, of course, the stock market. And FOMO is just basically saying that, okay, perfect example, Bitcoin. Bitcoin is hitting all new highs. Crypto altogether is hitting all new highs, and people are under fear of missing out, so they're jumping in at the all-time high, and that shit is coming right back down, and they are losing money, and then they probably sell at a loss simply because they got FOMO and jumped in when the price was already at its peak. This is the exact same thing with a stock, or the exact same thing with an option. You see that earnings hit, right? You decided not to get in, and now you get in FOMO because you see that earnings has resulted in the stock shooting up. So you try to jump in first chance you get, instead of allowing it to test some lower levels, because hey, people have got to take profits. So the price is going to consolidate and come back down. But you got scared of missing out on further gains, and you got in at the worst spot possible, and your options probably went worthless, or you just simply lost out. Okay, so FOMO just means the fear of missing out. Now, the final one, number five, will be hold, which is HODL. Now, that term simply comes from the standard term hold, HOLD, and it just means holding on for dear life. Now, this term mostly came about with crypto. It's just basically saying you're literally holding on for your dear life, because one thing we know about crypto is that we can get in at one point, right? It could push up, but then that shit could literally drop down. Think about Bitcoin. Bitcoin goes up 120, it can drop 10, 15, $20,000 in one day. But when the term comes, the term holding on for dear life is just basically saying I'm holding on I'm not going to sell it. I might want to. See that it's going down, but I'm not going to let this thing go, and I'm going to hold on to it for dear life. A lot of times, this is also referred to as stocks as well as an option that you may be holding on to, a trade. So you're just holding on for dear life. That's all that means. It's literally just sort of come from hold, HOLD. It's just swapped out a little bit and just, pretty much printed a new term for it. But that's all it is. So HODL just means holding on for dear life. You be holding on for dear life because a lot of times you want to just let that shit go, sell it off, don't lose anymore. But sometimes we already know where the stock is going, where this trade is going, or where this cryptocurrency price may be going. So we decide to still hold. So those were 5 stock and trade lingos that you may have heard, or just some that just kind of came on my radar from posting somewhere and someone asking a question. And so I wanted to kind of bring that here because one of the things with stock market and trading, you're going to hear more lingo than actual terms for stuff. And you may be aware of what it is, but you just never heard it referred to as certain things. So super important that you understand whatever lingos may be out there with things that are abbreviated in so that you know what is being referred to when you are trading or when you are investing on the stock market. All right. So I will see you guys in the next